Hey, y'all. Welcome to Salon Talks with Vine. This is your host, Vondelyn Hampton. On today, we are doing episode 2 with one of the best mortgage lender in the city of New Orleans. And his name is Billy. And I'm welcoming him on today. He's going to talk with us. Hey, Mr. Billy.
Hey, thanks for having me, Vaughn.
Nice coming out. Well, I heard that you get it done. You can get things done.
That's the name of the game. I try.
Number one. Well, what are the top 3 things someone needs to qualify for a mortgage today?
Getting a mortgage today, I would say the top 3 things is going to be credit, proof of income, showing some money in the bank. Credit scores typically start at about 580 on up is a starting point where you want to be to get qualified for a mortgage. On the income side of things, you need at least 2 years of work/school history. So proof of income or being in school for 2 years or more is a starting point. And having some savings in the bank. Not that you always need it. Some loans we can do with no money down where you don't even need any money to close, but having some money additional in the bank for reserves is always a plus. So I would say that's your top 3 things to focus on as far as to get approved for a mortgage.
Okay. Is it harder for entrepreneurs and self-employed business owners to get approved for a mortgage? If so, why?
It's not harder. It just needs to be planned and strategized a little bit better. The difference for someone being an entrepreneur, self-employed, is they're typically going to be 1099 where they're not getting a traditional pay stub and a W-2. So the biggest thing there, an entrepreneur is responsible for keeping money aside to pay taxes. Because that's the biggest thing I see with self-employed is we get tax returns and they don't show what the person really makes on paper. And that could be a hurdle as far as getting qualified. So I deal with self-employed all the time. There are other bank statement type loans that someone can do if they don't claim income on taxes, or if that doesn't work for them, then I can kind of plan and let them know what they're going to have to claim on taxes for the years coming up to buy a house.
Okay. So typically, how long that process be?
For the self-employed?
Yes.
It just depends. If someone's been in business for 5 years or more, we can get away and only need 1 year of tax returns on some loans. Some loans require 2 years of tax returns. So it just depends on what type of loan that we're doing for them. Or sometimes it can be right away. A bank statement loan, for example, if someone doesn't show the typical income you need on paper to qualify, we can go to a bank statement loan where at that point we take 12 months of bank statements and we add up deposits going into the bank account. Because a lot of times if the tax returns don't show, the bank account will show the deposits that they're putting in from their business. And that's an alternative type of loan we can do. So some entrepreneurs are ready to go from day one. Worst case could be a year or 2 of planning to have them ready to go.
Okay, so that was great information. So, okay, my entrepreneurs and my 1099s, please deposit, because that is your proof of income.
And I also even, to top that off, I have a 1099 loan as well, where we can go off the 1099s in lieu of the tax returns as well. So we got a few different options for self-employed borrowers.
Oh, wow, that was real good information. I told you, they said I got the number 1 mortgage lender. He's the best. Okay, question number 3. What financial documents should a self-employed person have ready before applying for a home loan?
So that's going to be anytime I get started with an application, the last 2 years of tax returns, the most recent 2 months of bank statements. That's the 2 key pieces for someone self-employed for me to get the loan application started. And then from there, along with once we have their credit report, I can kind of take it and advise on if they're good to go or if we have to plan for down the road to prepare them to be ready to purchase.
So I'm gonna backtrack a little bit. Okay, so would that also help with the 580 credit score, or?
Yeah. Yep.
Okay.
Yep. So it doesn't matter self-employed or W-2. We can typically start getting approvals at 580.
Okay. So, okay, question number 4. What are the biggest mistakes you see people make that delay or prevent them from getting approved?
Um, the biggest mistake is typically not taking the first step to get the loan application done.
Yeah.
A lot of people just have fear and don't want to take that first step on doing the app, which is the most important thing. Aside from that, just common things we see that could be a problem along the way. Um, NSF fees on bank accounts, overdraft fees, that's a big thing. Um, Making a big purchase, a big car loan right before they do the loan application.
Wow.
It's just something people don't think of. All of a sudden they want to buy a house, and hey, maybe waiting a month or two to buy that car could have got them approved, for a house. Um, Cash deposits into bank accounts is something we always have to look at. That could, not that it'll stop a loan, but it could avoid a little bit more paper trail and work along the way. But the biggest mistake is always people not taking the first step to get the pre-approval process started.
Okay, and I have another question. So what about the late pays? Let's talk a little bit about the late
Okay.
pays. Because usually the myth is you can have no late pays within 12 months. So is that true?
It's sort of step further back.
Mm-hmm.
30-day or more late payments is the kicker. I get people sometimes that'll come and think their credit is bad just because they were maybe a week or 2 weeks late on a car payment or a credit card.
Mm-hmm.
They might have paid a late fee, but in fact, that doesn't help. That doesn't hurt on my side, because until the account is 30 days or more late, it doesn't report to credit as being a true late payment. But you mentioned the 12-month. The 12-month is key on credit reports, is because a lot of people think credit score is just the ultimate driving factor, where it is important, but on top of credit scores is the history on the credit report. So if we got a deal that's borderline, maybe let's just say a 600 credit score, kind of borderline on approval or not approving, the most recent 12 months carries the most weight. So if somebody has like a 60-day late or multiple 30-day lates within the most recent 12 months, it's probably going to stop that loan from approving. Whereas the most recent 12 months is clean with no 30-day lates, no collections, chances are that loan's going to get an automated approval. And what I mean by that is we run loans through an automated underwriting system, and that's what gets us our approvals.
Okay. So this is my last and final question. Question 5. If someone isn't ready to buy today, what steps should they take over the next 6 to 12 months to become mortgage ready?
Good question. The biggest thing I can say, if somebody's not wanting to get started now or if not quite ready, is pretty much to pay down or pay off all credit cards. Credit cards influence the credit score the most. So if they're looking at 6 to 12 months out, paying off or paying down the credit cards is going to boost their scores the most. Don't take on any new debt. Don't have multiple people run your credit also. Avoid as many credit inquiries as you can and save as much in the bank account as possible. Again, even though you may not need it, the more reserves somebody has in the bank, the better chance for approval. And then sort of a new thing that's trending, try to avoid the Klarma, the Afterpay, all those ways you can shop online and make the payments easier.
Yes.
Although that is easy when you're buying a house, that gets tricky and that could cause a higher DTI.
Right.
Because that's something that underwriters are starting to sniff out more and more and more. So try to avoid making those purchases if you can.
Yes. I do want to ask this question though. What is a piece of advice you would give every entrepreneur who dreams of becoming a homeowner?
Cool. I would say make as much money as you can. but also just get used to putting 20 to 30% aside in a separate account just to prepare for taxes, as because that's the biggest thing. To get the best loans out there, like your conventional, your FHA loans with the lower rates and the lower down payments, you have to claim your income on paper. And underwriters go off of the net income, which is after all your deductions and your write-offs. And of course, most people want to strategize to pay the least amount of taxes possible. That could hurt you when buying a house. So I just tell people self-employed, set aside a chunk of money. That way you have to pay some taxes to get qualified for the best loans.
Okay, so now we're going to talk about taxes. That's going to be our next episode. Thank you, Mr. Billy. You were so much help. And I do want to add this. What I have learned today was entrepreneurs, my 1099, please deposit. Because Mr. Billy can get you approved. What the name of that loan is again with the deposit?
We got the bank statement loans. We have 1099 loans.
1099 loan. That's
all
it.
your traditional as well.
1099. See, entrepreneurs, we going after that 1099, okay? Mr. Billy, Premier Lending gonna get it done. Thank you. Have a great one.